Hello and welcome back. Thanks for tuning in this week. So Canada's 2008 moment is almost here. But before I get into that, I want to get into a couple other things, some mortgage arrears data that just came out, and an announcement from our fearless leader of the opposition regarding tax breaks on new homes. So let's start with the mortgage arrears info. So the Central Bankers Association just came out with their latest mortgage arrears info. This is from August, and this was just released on November 1st. So we have a 90-day arrears report here in August. So these people are 90 days behind in August. And of course, now it's 2 months after that at the beginning of November. So you can see how lagging this data is, but let's check it out anyway. And they do start with an opening statement here. Canada's mortgages in arrears rate low compared to other advanced economies. And they only show 3 advanced economies. Ours is one of them, the UK and USA, but we'll take a look at that in a second. And they go on to say Canadians are also careful borrowers, and this is evident when looking at national mortgage delinquency rates in Canada that show that more than 99% of mortgage holders in Canada are in good standing. And I don't know about that statement. I think we've been pretty reckless, or many Canadians have been reckless. Now, they're talking about 99% of mortgage holders in Canada. Well, what about the credit unions, and what about all those investment corporations or private lenders out there that loan? And we've seen a record number of those in this cycle in the last 10 years or so. And most of the power of sales I see are from like mortgage investment corporations and private corporations that are lending money. So they don't include this data, but they seem to like make it seem like everybody, like 99%, but this is not the case. But anyway, let's look at this chart here, the USA and the UK. The USA is on top. 5% they had in arrears at the peak in 2008, or over 5%. And again, when COVID hit, they had 5% of their mortgage holders in arrears. Now, I don't know where their data comes from, if it's only select banks. In Canada, we're using 11 banks, not credit unions again, and not private investment corporations or private lenders. And of course, Canada is way at the bottom there. And we're like the golden child here. Now, again, they only used 3 advanced economies because back to that blue part, Canada's mortgages in arrears rate low compared to other advanced economies. And they only have 2 other economies to compare to, so not very convenient there. And when you get down to the actual rate, we're at 0.2% of arrears or mortgages in arrears in Canada. And that was the same as the month before. If you watched my previous video or 2 videos ago, I've talked about this. Still at all-time lows, not at our all-time line, but still very low, below the previous all-time lows, I should say. And further down the page, they talk about Canadian borrowers have consistently maintained low rates of mortgages in arrears even throughout challenging periods such as the global financial crisis and the COVID-19 pandemic. And we know why. There's like the extend to pretend and extended amortizations and all the rest of those things. So we've got a lot of tricks up our sleeves in Canada, and the government is very heavily involved with regulating and bailing out Canadians and the banks, of course. But interesting here that you'll see the unemployment rate and the mortgage arrears here are very closely related. When unemployment goes up, the mortgage arrears go up, and you can see at the right-hand side there, it is trending up now, both of them. So of course, that's all part of my home buying recipe, which if you watch regularly, you know what I'm talking about. Okay, so here I have the data from the central bankers from their latest thing, and you'll see on the right there, it's you can barely see it, but 2 months in a row at 0.2%, which is, of course, very low, near record lows, not even at our previous lows as previously stated. But let's move on to the number. So the last one was the percent of mortgage arrears, but now the number. I just posted this on my X this week, and you can see we just passed 10,000, which was a big point or a big number I was looking for. And on an uptrend, you'd have to go back to January 2008. We all know what happened then when our mortgage arrears were at 10,100 or anything close to this. That's a big threshold we passed there. Of course, we do have more people living in Canada now, so the percent is obviously lower when you look at that on the chart. But we do have a lot more private lenders and private lending and credit unions lending, things like that. So Yeah, these numbers are, to be taken with a grain of salt because situations have changed and lending practices have changed since that time. So it looks a lot better than it is. But it's not just me talking about it. The latest here, if you do a Google search, just in the last 24 hours, you'll see all the news channels are talking about the rise in mortgage delinquencies. Now, I don't think they've risen that much, but maybe they have some data I don't have. But mortgage delinquencies rising with Canadian in fragile financial state from the global news there. From the Financial Post's risks loom in the mortgage market as renewals and delinquencies rise. Stories, 85% of mortgages up for renewal in 2025 face higher interest rates. And CMHC is even weighing in. CMHC says mortgage risks remain. So a little bit more optimistic, but they are concerned about it. And yeah, just in the last 24 hours, all this stuff has come out about mortgage delinquencies and the alarm bells are going off. All right, now moving on. If you remember 2 weeks ago, I did a video about we can build homes cheaper or something like that. And everyone always says, well, we can't build homes cheaper. And I analyzed it. And of course, not even reducing construction costs. But the biggest factor that we can reduce is taxes and government fees, development fees, whatever else. Well, last week, the leader of the opposition came out and said when he's prime minister, he will cut the federal HST, which is 5% on all new builds under $1 million, which I think is a fantastic idea because looking at the math, it doesn't take a rocket scientist. The easiest way to reduce a home cost is by cutting the tax. The government's making $130,000 off a $1 million home in Ontario. Why not cut the tax? Like the government has to do their part to reduce these home prices, right? And of course, other things, land can come down also. So he made that announcement last week, and then this week he followed up by sending a letter to all the premiers in Canada asking them to cut their HST or their provincial part of the HST off of home building also, which of course that's what we need to do. In Ontario, we already have a $24,000 rebate, which came from the times when the average new build was like $300,000. So it's not relevant these days anymore. It's still a little break, but you're still paying over $100,000 on a $1 million home. So anyway, let's look at what he has to say in a news interview just yesterday on the subject so you can hear it from the horse's mouth.
Well, Conservative leader Pierre Poilievre has written to the province's premiers asking them to eliminate sales taxes on new homes sold for under $1 million. The letter follows Poilievre's pledge last week that if he becomes prime minister, he'll axe a federal sales tax on new homes sold for under $1 million. The Conservatives estimate that this would reduce the cost of an $800,000 home by $40,000 and would spur construction of another 30,000 homes per year. And for more on this, we are joined live by federal Conservative leader Pierre Poilievre. Good afternoon. And let's start with this. Just going along with this letter, what is the pledge? How is this going to help those families that you say need help?
The leading cause of higher home prices is government bureaucracy and taxes. A third of the cost is direct taxes alone. So I'm saying let's axe the taxes on homes. I'll get rid of the GST, the federal sales tax. That will lower prices by as much as $50,000. And then I'm calling on the premiers to do the same at a provincial level. If that happened in Ontario, it would lower home prices by $106,000 or about $5,000 in lower annual mortgage payments. It would also stimulate 60 or 70,000 additional home building units every year that would further increase affordability and decrease prices. So this is a common sense plan to axe the tax and build the homes.
All right, so let's look at the math here. And, if you watched my video a couple of weeks ago, you know that I went through this. But just say in Ontario, $1 million house, he's saying it would save you an additional $106,000, which adds up because we already have a $24,000 rebate. So he's not even including that. So he's being very honest with the math here. So it would be $130,000 minus the 24 we already have. So $106,000. It would bring your $1 million home, which is still absurd, mind you, for a new house, in my opinion, especially in my area. You're probably paying at least that in my area for a detached new home, but it would bring it down to $894, so a big savings. On an $800,000 home, he said it's $40,000 savings. They would still have the $24,000 credit from Ontario, the existing credit. But on an $800,000 home, that would be $824 if we had no tax credit, but we do. So $800,000, that would bring it down to $730,000. So again, significant savings there, and it is a big chunk of money to save. And of course, I see the lot prices and whatnot coming down also. Now, I guess you have to look at the current government's plan. Their plan is to keep taxes elevated, not give you any breaks, but they're deciding to take that tax money that they've collected and give it directly to the municipalities, bypassing the provinces, mind you, except for Quebec, but giving it to the municipalities to do what they want to do, increase density. They have an agenda behind theirs, which is like not capitalism. It's, something else. I don't want to get into politics here, but he's proposing now, the opposition leader, to say, look, let's give the savings to the people and build more homes, where I agree with his solution. Cut the tax and let us build what we want, instead of taxing us to the grave and then telling the cities what they should be building, fourplexes, no parking, and all the rest of this. Anyway, let me know what you think in the comments. Do you think getting rid of the tax on new builds is good, or tax cuts in general are good? Or do you think that we should just keep paying high taxes and let the federal government dictate to the municipalities and the provinces in some cases on how we should be building and what we should be building? Okay, now moving on to our 2008 Canadian financial crisis, or real estate crisis, whatever you want to call it, and the comparisons, the direct comparisons to where we are compared with pre-2008 crash in the States. So let's check this out here. So if you follow me on X, I did post this earlier this week or on the weekend at some point. And here we are. We are right here. This is where we are in our timeline. This timeline is from 2004 to 2014, a 10-year snapshot of the U.S. And of course, it includes 3 of the 4 things I put in my home buying recipe: house prices, interest rates, and unemployment, all the key to a sustainable economy. And of course, the opposite is true also. So we are right here. So we had rate cuts 6 months ago. Ours was 4 months, but so maybe we could move that arrow a little bit up. But regardless, we're in that general zone. House prices peaked 2 years earlier at that point in the States, and unemployment hit their low a year or maybe 18 months, whatever you want to count there from that bottom there. It kind of bounced off the bottom a few times. So that is where we are. Of course, the interest rates is the driver of all this economic activity or lack of. And they started cutting rates, and this is when things change, or when things are changing, when rates are being cut. Now looking at Canada. So of course, here we are. We're over on the side with all the numbers here right on top of my head. And that is the here we are, because we are in real time now. And when did they cut rates? 4 months ago, as opposed to 6 months ago on the last chart I showed you from the US. Unemployment reached its low 2 years prior, and the house prices peaked 2.7 years earlier. Now, if you look at this, we almost have like a double top. Now, ours was more pronounced because they waited too long to start hiking rates. But looking back at the US one, the red line there, they had a double hump on the top, and we were very similar, except ours was a lot more pronounced on the run up there because, again, they waited too long to start hiking rates. Now I'm just going to put them side by side to make it a little easier to see. And of course, you see the red line, the house price index. Now, also, I did use the house price index in Canada. I don't like using it, but I used the Case-Shiller index in the States. So I wanted to keep them very equal in the analysis here. So you'll see the run up there in the Canadian MLS HPI and the Case-Shiller. And of course, the interest rates started going up because prices go up, right? When house prices take off like this, you have pretty much one tool, unless you want to exterminate the population. But you have one financial tool, and that is to raise interest rates. Slows the economy down, slows houses or the housing market down, right? Now, the housing market isn't the only reason they do that, but it is a big factor in Canada. As you see, the Bank of Canada always mentions housing and the real estate market. So both of them are going up, and look at unemployment was coming down as they're going up because, of course, everyone's got jobs, the market's on fire, and they raise rates, and that slows things down. Unemployment starts to rise, and the house price gains stop, and they start to reverse course and decline. Now, this one here, Canada, again, was late. So I drew that circle there. This is when Canada should have started raising rates. But remember, this inflation was transitory, so they kind of stalled on it. They waited 6 to 8 months too long. They should have started raising rates in 2021, but and it would have been a lot closer to the previous cycle from the States there. And again, I'm not just comparing, when I do my home buying recipe, I'm not just comparing to the States. I've compared to the 80s and very key times in Canada when these cycles play out, right? So it's not just one set of data I'm comparing it to, or to make my analysis from, or my recipe from. So yeah, if we could slide that blue line back to start where I drew that circle, of course, it would look very similar to the U.S. But again, things were delayed in Canada and excuses were made. Lastly, looking at the time that rates were held at the top for them to do their job, right? And this is tough when they start to cut. Like, do we start cutting now? Is it too early? Is it too late? And you've heard this in the media. Some economists say, well, they waited too long. Or some people say they didn't wait long enough. They should have kept them higher for longer. So 12 months they kept those rates up there in the U.S., and in Canada this time, they kept them up for 11 months. So it's very similar. Again, these cycles, this is not just made up stuff here. They happen for a reason, and it's always the same playbook. So after seeing that comparison with Canada and the US in 2008 and all the indicators and all the stars aligning there, would you think it's safe to say that Canada is on the same track? Or do you think that we're going to have some amazing reversal and our economy is going to be booming next year, jobs are going to be created, this is just a temporary downturn and the worst is over, and I guess real estate would go up $1 million for the average resale house at that point? But yeah, let me know what you think. Do you think this is got merit behind it, this analysis, or not? Anyway, that's all for this week, and I'll see you in the next one.